Picture the global economy as a massive, synchronized engine. For decades, this machine has run smoothly on exactly two specialized fuels: the physical flow of oil and the financial dominance of the US dollar. If either of those stops, the gears catch, the momentum dies, and the entire system violently tears itself apart. In April 2026, we are watching that breakdown happen in real time. A military conflict known as Operation Epic Fury, involving the US, Israel, and Iran, has been escalating for a month, tearing through supply chains and inflicting severe economic damage. The tactical exchanges are highly destructive. American forces are targeting civilian infrastructure, like unfinished bridges inside Iran. In response, Iranian air defenses have successfully shot down American F-15 and A-10 aircraft over the Persian Gulf. This back and forth escalated into a terrifying social media ultimatum from President Trump. He gave Tehran exactly 48 hours to reopen the Strait of Hormuz to shipping, threatening to obliterate Iranian power plants, oil wells, and critical infrastructure if they refused. A single military deadline typed out on a phone immediately triggered global panic. It proves how utterly fragile modern supply chains are, forcing investors to watch markets hemorrhage while a literal ticking clock counts down to wider war. The Strait of Hormuz is the planet's primary physical artery. Iran deployed a devastating counter-strategy, threatening to release naval mines across the coastline to sever these vital transit routes. Consequently, Brent crude oil prices spiked nearly 50%, hitting $110 a barrel. Energy is the master input for everything else. When oil jumps that fast, it acts as an immediate, invisible tax on the global supply chain. That reignites inflation fears and drives up government bond yields, making it more expensive for countries to borrow money. Whoever controls physical access to this one sliver of water holds incredible leverage. They effectively dictate the baseline cost of living for billions of people. To see how fast that leverage moves, look at the United Kingdom. A physical standoff in the Middle East instantly disrupted domestic civilian life thousands of miles away, rippling through everyday routines. This declining bar chart tracks available UK mortgage products over just a few days of the conflict. Hundreds of loans vanished from the market entirely, while the rising trend line shows average 2-year fixed rates jumping to 5.43%. An F-15 fighter shot down over the Persian Gulf directly and immediately increases the monthly cost of buying a family home in London. While oil is the physical fuel, the US dollar is the financial operating system. It dominates international trade as the world's primary reserve currency. But as Western sanctions pile up, nations like Brazil, Russia, India, China, and South Africa, the BRICS alliance, are actively discussing an alternative, commodity-backed currency, to bypass American financial control entirely. President Trump treated this financial rebellion as an act of war, threatening a 100% tariff on goods from any BRICS nation that attempts to replace or abandon the dollar. Investors realized a full-scale economic standoff could shatter global trade. They panicked and fled to physical safe havens, driving gold prices violently upward toward the $5,000 an ounce mark to protect themselves against currency debasement. Currency dominance is America's ultimate weapon. Because the entire system is priced in dollars, any credible threat to that monopoly triggers systemic worldwide panic. Right before the 48-hour deadline expired, the tensions suddenly evaporated. President Trump announced that talks with Iran were productive and paused any military strikes for a 5-day period. This split-screen visualization tracks the immediate market whiplash. On the left, oil tumbled 10% on news of the pause. On the right, the stock market surged, posting its best day since February. Even domestic U.S. jobs unexpectedly jumped by 178,000. Political leaders immediately pointed to those strong job numbers as proof of a roaring economy, but they largely ignored the fact that the entire system had been minutes away from a catastrophic breakdown. A 5-day military pause doesn't fix the structural flaws. The crippling reliance on Middle Eastern energy and the fierce dependency on the US dollar haven't been resolved. They've just been put on hold. When the world's economy is balanced on a few hyper-concentrated physical and financial choke points, stability is largely an illusion. Global prosperity remains exactly one missed deadline, or one naval mine, away from disaster.